anything set in stone just yet. I did a drawing kind of similar to what Nate's saying, but until we break above that Liberation Day close, I don't know that anything's really for real. It's a lot of, I mean, have we even had a single deal yet, really? I'm sure we've
No.
had one or something, maybe a small, any single one.
Yeah, you know what's really interesting, the news that came out overnight or this morning was that we don't have any we haven't even gone to the table to start the negotiation process with any country yet. So everything that we've experienced from February until now has just been just like one giant speculation. Like no one has even started the dialogue yet, which is kind of crazy.
Yeah, and so that's kind of why I just say it's just a coin flip right now. I've lightened my position sizing for short-term swing trading. However, for long-term investments, I've gone a little bit more speculative, having a feeling that here in 5 years from now, this will look like an amazing buying point right now. But right now, like it's just news, rumors, what you see on Twitter, what you see on True Social, and I'm not knocking the tariffs one way or another. You could agree with them, you could not agree with them, but right now there's just nothing set in stone yet. It's just still all nobody really knows what's going to happen. And then we had the news of the China deal might take 3 years to happen. And by
That's
then
right.
we're going into another election. And guess
Yeah.
what? Like it's going to be two new uh, people running for election, ideally. We'll
Well,
see about that.
it depends on if you believe Steve Bannon or not. If there's going to be
Yeah.
two new
Yeah. A
people,
lot of that's the next thing we'll be talking about here in a couple of years.
dude.
But
Low key, like I don't think it's a crazy scenario that 3 years from now, well, 2.5 years, whatever it is, mark your calendar and have some puts on in case the Trump side comes out and positions a way that he could run again, and there's just a total crisis moment where the market and everything else reacts. Like I don't think that's a crazy scenario.
no, I think it's
Um,
very realistic. And I'm not picking a side here. I'm not trying to get political or say one way's right or the other, but they've been already very clear that they're going to look into ways to, if that's a possibility. So.
Yeah. So, and again, same thing. Like politically, no no major opinion there. Well, I won't share major opinions there. I guess I'll say, but market wise, I think it would be like a totally uncertain panic. So, yeah, I don't think the next 3 years are going to be smooth, grinding, easy to trade markets. But I guess that's where we come in. That's what makes it fun. Dude, I think earnings season is going to be wild too, just because the floor and the ceiling is so extreme right now. I feel like on all of these different earnings. I'm doing earnings today. I'm doing a little class today at 2 o'clock, and I'm going to walk through a couple strategies, not with the idea of like, hey, this is how you predict earnings, because I'm the last person who's going to tell you that, but just how to cut out some of the volatility, how to do some more premium based trades and that kind of stuff. If you do want to try to tap in, like Graham was saying, use some smaller size, try to tap into those opportunities. I think, buying super expensive calls, super expensive puts right now is a really brutal game to play.
Yeah. One name that had earnings yesterday, it's one of them that we've traded a lot over the last year. It's been beat up. I posted it, I think on Tuesday's opening playbook and in Telegram. But ServiceNow, ticker NOW, has been beat to shreds during this most recent drop. The stock dropped almost 50%. It's been a very great resilient stock over the long term. And anytime you get a big drop like that, it looks like an awesome buying opportunity. Well, it's up 15% this morning on earnings and
Oh,
gaining steam.
wow.
Now, it might fade a little bit from there. I don't know one way or the other, but this is one of those stocks that if some stability comes back in the markets, this is going to be one of the first ones to really gain steam at a very high rate of speed and have a lot of upside potential. So ticker is NOW. They just had earnings yesterday after the close, up 15% today. But today you have Google,
Yep.
Intel, T-Mobile. A lot of
T-Mobile is
big
one I
names.
got my eye on. We're going to do a live trade on T-Mobile, and there's a couple other good ones in there too. Some big expected moves. Um, ISRG's up too since you called the
Yeah.
post market low. What's it? 486, up about $24. Since you kind of pointed out that little gap down post market. So,
Oh no, no, no. It was at 440 when I sent it in Telegram. It's at 500 right now. So,
that's right. You called this. So that was 2 days ago that they dropped.
yep.
Okay, got it. So
440 to 500 in 2 days on
oh,
a
so we're up
stock with
13
double
bucks
B
just today
earnings.
on a normal fall through day is what you're saying.
Yep.
Okay.
Yep. It was a double B on earnings and the stock dropped like crazy. I love it when that happens. It's like a little gift.
Well, I thought that's what I loved when coin dropped on double beat and I bought, 50,000 more and then it
Ah, Diamond
And then
hands,
it went
baby.
down 30 more percent.
Diamond
But
hands.
hey, I'm starting to rebuild my optimism in coin now that Bitcoin itself seems to be so resilient and getting inflows. Today it's down like 0.5%, but been so consistent and starting to build my optimism on the coin trade as well. So I'm still holding on to it. I also, while volatility was so crazy in early April, I was getting some insane covered calls on coin, like literally like 25 and $30 a contract for 5-10% out of the money. So I think I probably made, I don't know, 30 or 35 grand on the covered call size,
Oh, nice.
which doesn't make up for the 90 grand I'm down on the stock, but it's
It
a
It
nice
softens
little,
the
helps.
blow,
It helps.
maybe.
yeah, it's a nice little buffer there. But yeah, I'm excited because I think we're all talking about volatility. I think that's what Kane's going to get into a little bit today too. It's what I'm excited about on the earnings side. If you guys get a chance at 2 o'clock today, join me for that. But excited to hear what Kane has to say too.
Yeah, Kane. Obviously, VIX hit a very extreme level just over the last week. Hit 60. We went through
Yep.
some analysis on how that can be a really good buying opportunity over the next year. But right now, it can make it kind of frustrating for traders, swing traders looking for a direction or a trend. Hard to find, but I know you're the man with a volatility edge. So I wanted to bring you in here for our Thursday training session and kind of walk us through how you look at volatility and how you might trade it.
Yeah, for sure. Let me share my screen so people have something to actually look at.
Are you saying
And
our faces aren't
grab a
worth looking
chart
at,
over
Kane?
here.
All these beautiful faces on camera aren't exciting enough to look at.
That's right. I don't. They can visualize the charts on our faces, right? So let's take a look. So what would you say? I mean, it's already a giveaway, but basically, what is the market force that's kind of controlling everything right now? And some people might say, oh, it's tariffs and it's the news, and but I'm talking like the root market force. What's the most important like force within the market itself? And we've said the word multiple times since we started talking in the last 10 minutes, and the word is volatility. Now, it's a word that you're hearing a lot lately, but most people don't really understand what it is. And we'll see. Maybe Nate and Graham will learn something here too. So, what is volatility? What does it look like? How does it show up? And what does it mean? And how do we trade because of it? How does it change our trading? Those are all questions that I want to start to answer today. So because it is the number one most important force inside the markets today, it's going to determine how profitable you are, whether or not you're profitable, whether you blow through your stops and just get stopped out just to see something turn around and reverse on you. So basically getting stopped out for no reason. It's going to determine the strategies that are going to work the best for you. So it is really something that you want to understand. So let's go out there. What's the definition of volatility? What does it mean to be in a volatile market? Let's see.
I would
We
say
got
increased, like high to low, average to range size.
average true range. Okay, that's one way of looking at it. So basically, average true range is a measure of the previous day versus the today, the close versus the highs and the lows of the previous day, and then averaged over time. Is the blue dotted? Yeah, we can. Yeah, this is a VWAP, but that's not what's important here. Let me take those off just so we don't get distracted. So, okay. So volatility, and how do we measure volatility? If you were to say, hey, let's see what volatility is today. What do people do? They tend to say, hey, let's take a look at the VIX, right? And how does this VIX right here, how does that correlate with what I'm looking over here on the SPY? So this is something that people kind of think they understand, or maybe they assume they understand, but I'm going to really start digging deep on what it really means, okay? So if I have elevated VIX, so actually, before I get to VIX, let's take a look at this. What is volatility on a chart? And why is volatility called the fear index? And is that an accurate name for it? Okay. So over here, And someone just said it, size of a candle, very good. Look how large the candles are right here versus the candles right here versus the candles right here. It's the size of these bars. And Graham said it also, average true range is basically the movement on a day-to-day basis in how far those highs and lows go and the closes. What is that range? So here you can see that range is really small. Here the range is definitely bigger. It's probably about 4 times bigger than the size of these candles. And then look at these candles right here. They're probably 3 to 4 times larger than these. Well, the ones that we've had in last week are about the same, but these over here are definitely 3 to 4 times larger than these over here. So everyone's following that so far, right? So what does it mean when a range is large? So the way that I like to think about it is, hey, if I ask everyone right now, how many hours are there in a day? Is there anybody who is not going to say 24? No. So if I draw on the screen, let me grab something I can write with here. So I can write on the screen. Okay. So if I plot everyone's answer on how many hours are there in a day, every single answer is just going to fall right on top of each other. And this is just going to be one dot at 24. Okay. Now, let's just say I ask everyone, what's a good example? Something that, okay, how high is Mount Everest? I don't know. I have no idea how high it is. So I'm going to guess, I'm just going to guess 25,000 feet. And I don't know, what's your guess, Graham? And
Let's
Nate?
go with 41,000.
What was it? 21?
Yeah, 21, whatever. I have no
41.
clue. Oh, Mike here has it. 28 and change, he says. 38K. We got some guesses here in the chat.
28K.
Isn't a thing like 9K meters? So what that, like 29,000?
38K, 29K. Okay.
9K? What? There's a meters definition for all the peaks. But I
Is
forget
there?
what the number
I
is.
don't know.
There's only like 10 peaks above a certain 8K. Someone could help me in the chat.
Nate, I think you're missing the forest from the tree.
Oh, guys, this is very important. We need to stop everything we're doing and figure.
That's right. We need to look up the precise height of Mount Everest right now. All right. So here's the thing. We got a whole bunch of answers. The lowest one was here, 21K. The highest one here is at 38K. And so if I draw a bar, we would say 21K would be down here. And then we have 38K up here. And maybe if we surveyed people, 21 would be way low and 38 would be way high. And then we have this cluster right here at about 28, 29K. So we'll call that 29K. And then I have this maybe cluster here at 25K. A bunch of people were guessing 25K. Okay. What does that look like? Looks like a candle, kind of, right? And so let me ask you, when this candle looked like this, and it's ranging from 21K to 38K, versus we have this dot at 24 for the number of hours in a day, which answer are we more certain about? Which one do we have more confidence in? It's this one, right? Everyone agreed. There's zero disagreement. There's zero doubt. It's just one dot right here. Whereas over here, when I asked about Mount Everest, it spanned this huge range. So anytime you see a large range, that is an indicator of uncertainty. The same is true in mathematics. Like if you're an engineer and I build a tolerance, okay, and I say, well, my car is allowed to have an engine heat of I have no idea. I'm just pulling numbers out of my butt. Between 500 and 800 degrees Fahrenheit. It's okay. That engine's going to be okay. Okay. Well, when I go to an airplane and I say so that was a 300-degree range. If I go to an airplane and I say, well, probably I would think that the engine in an airplane has to be more tightly controlled. And so maybe there's only a 200-degree range that can go. And then when I go to a spaceship, that tolerance has to be even better. Or if I say the glass on a car, the tolerance can be loosey-goosey. And I'd say, well, what about the glass on an airplane? No, it's got to be really tight. What about on a space shuttle? It's got to be super, super tight. Okay, so those tolerances mean I have a tight range. I have to be super confident about the glass inside of a spaceship versus the glass inside of a car. Okay, so that's exactly what we're talking about in the markets when we're talking about volatility. If I see this right here, that market is really confident. It knows where the price is within a tiny little range, and we're all agreeing right at that flat line. It's just a tiny baby doji candle right there. That's what it looks like. Versus this, there is a lot of uncertainty about prices at this particular point in time. I don't know what was going on that day, but there was. There is uncertainty about this right here because when I'm looking at volatility, I have to include the gap. That's what ATR does. It includes the gap. Whereas if you did ADR, average daily range, you only include the high and the low. You don't include the gap. So ATR will include the gap. So that is a volatile day. And what it meant was that we were unsure about where prices were, although we had a lot more agreement that prices should be up here and not inside of this gap. So for whatever reason, there is a lack of certainty because there's this big range of answers of what price should be. There's a huge amount of uncertainty on this day. Okay. So there is a huge amount of volatility. And you go, Kane, that was a really positive day. Why would you say that's volatile? Because supposedly the VIX is fear, right? Volatility equals fear. Like volatility. Okay. And what I'm telling you right now is that it's not. Volatility is equal to uncertainty. We don't know. It just means we don't know. We're not sure. We're not sure about prices right now. We can't be sure because we don't know about tariffs. We don't know about politics. We don't know about whatever. And so we're seeing this large range of prices. That is uncertainty. Now, volatility gives you no information on direction. Okay. So if you start defining volatility as fear, you're going to assume volatility is a downward direction. And it's not. It just means, I don't know. I don't know, it should be up. So here is uncertainty, that huge green bar right there. Somehow we have uncertainty with directionality. So what does that mean? How does that happen? So we're uncertain. There has to be, what moves this in one direction or the other is something that we call in the market, something that we call sentiment. Another word for sentiment is feelings. Another word for feelings is emotions. So there are two main driving emotions in the markets. Some people say fear and greed. Okay. I say fear. Maybe call me optimistic, but I don't think greed operates in the markets. Greed means I just want to make money. I don't care about anything else. The only thing that matters is money. And sometimes we think of corporations like that. Sometimes we think of capitalism like that. It's the most important measure. But I don't think so. Not, especially not today. It might have, like in the 1900s or 1910s, 1920s, maybe we could have said that. But I don't think today's markets and today's people, citizens of the world, operate purely on greed. Greed means I don't care who I screw. I don't care what happens to them. I'm taking this money right here. I'm greedy. I don't care if children starve in Africa. I don't care if people are homeless. I don't care if people blow up in their cars, as long as I sell the cars. That would be greedy. So rather, I think there's two types of fears. There's fear of loss and fear of missing out. And what is the difference between fear of loss and fear of missing out and greed? Fear of missing out is, look, those people are making money. I want to make money too. Look at all these people making money today. I'm not one of them. My 401k is still sitting here at loss right here. I am having fear of missing out. I can't call myself greedy. You can't say like, oh, I want, no, you're not, hey, I want money. You're saying, hey, people are making money. I want to be able to participate in that. So there's two main driving forces here. And if I have a huge bar like this, there is uncertainty in this world, uncertainty about where prices should be, but people are fearing that they're missing out. And sometimes we call that exuberance. Okay, so other people are making money, other people are moving money. I want to move my money also. And everyone piles in a huge volume bar, and we all jump in. And so everyone has this fear of missing out because look how much it's already moved, and people start piling in. That gives us the direction. Okay, so on this day, we didn't have fear of loss at all, even though it was a hugely volatile day. It just, we had a fear of missing out, or we had exuberance. Okay, so those are really important. We have to know what is driving, which main emotion is driving the market today. We know that by the buyers and the sellers. And then we have to know the volatility environment that we're in. So we know that volatility shows up by the size of the bars and the gaps. That is volatility. What about VIX? How does VIX play into all of this? Okay, so if I see VIX, and okay, so let's mark a couple of important days right here. Oops. Let me go back to a pointer. Okay, here we go. So let's mark a couple of important days. We've got, what was that super tiny day? This one's pretty tiny, okay? So that's December 6th. Then I've got this day right here. That was obviously a very volatile day on Wednesday, April 9th. And then let's just say, how about this day right here? That large red bar right here. Okay. So if the VIX is volatility in the markets, I would expect VIX to be super small on December 6th, quite large on December 18th, and ginormous on Wednesday, April 8th. Okay, so let me see. I think side by side is probably best. And SPY. Did we? Okay. So let's line up our crosshairs so we can see. Okay. So over here, if you can see on on the right hand part of the screen, the dotted lines moving around also. So on Friday, February 16th, we expected to be low, and it was. December 18th, we expected to be higher. It did spike up. And then over here on the 9th, we would have expected it to be quite high, but it was actually kind of low. The high was 2 days before that over here. And then on the 9th, we went way down all the way to about 33 from the high of about 60. So it halved. But this bar is by far the biggest bar on the chart. So you might be going, Kane, did everything that you just spent telling me, was it a big giant lie? Because if we follow VIX, then we might get the idea that it is the fear index. Why? Because a lot less fear in the market today than there was on these gap downs. So that VIX came down. And then over here, where that big red bar, we got fear, so it spiked up right here. And then over here, we have no fear in the markets. We're very close to an all-time high and just chugging along. So it looks like Kane was wrong about volatility being the fear index, or VIX being the fear index, or volatility being associated with fear. Okay, so we're going to explain why that might be. And what's really important is that what you've heard about VIX is not equal to volatility in the markets. Okay. All right, Kane, what are you talking about? That's basically the definition of the VIX. It's volatility. Everyone says it. It's volatility in the markets. So here's the big distinction right here. This right here, everything that I showed you on this chart over here on the SPY, the size of the candles and all of that, that is actual realized volatility. It is something that we can observe with our eyeballs and see what is happening on the chart. VIX is made up of, it's a calculation based on about 30 days. It's like 23 to 30 something days to expiration. Okay. The implied volatility of out the money calls. Okay. And the most important thing here is, well, actually two important things. 30 days to expiration, which means what? Future. This is now. Okay. This is future. And implied volatility, not volatility. I spelled that wrong, obviously. It's not volatility. It's implied volatility, which means expectations. This is observable. And IV cannot be observed. It's not going to be on the chart. You can't see it on the price chart. IV can only be back calculated based on options prices. Okay? No one can tell you what IV is until you tell them what the market maker is pricing the options at. And once you know what the market maker is pricing the options at, then you've got to look at delta, you got to look at gamma, you got to look at theta, and you've got to look at interest rates. And then you can back calculate IV. Okay? That is the definition. So this is where most people are confused. VIX is not volatility in the markets. It is the expectation of volatility. What is volatility? What was another word for volatility over here? Range, price ranges in the future, roughly 1 month out. Okay, and it can only be calculated. It can't be observed. So what we're saying here is that it's expectations, but whose expectations? It's the expectation based on options prices, and who sets the options prices? Market maker. Okay, so what VIX tells us is the market maker's expectations of how much range we're going to trade in the near future, or in the, if you want to call 30 days near or distant, that depends on your perspective, but roughly 1 month out. Okay, so we need to be very clear on this and what it means for us, why this is important for us as traders and investors in the market. Why is this important? Because when I look at this volatility and I look at this little bar right here, how big is it? How big is this bar? It is, let me measure that percentage, okay? That is a 1% range. You're like, come on, Kane, I have 1% over here. Okay, that little green bar is 1%. So the volatility so far today, and the volatility yesterday, and last week over here and over here, it wasn't that big. But if I look at VIX, we're in the high 20s, we're in the 40s and 50s. That volatility, according to VIX, was huge. So we have to understand that we're not comparing apples to apples here. We have the observed volatility in the markets versus the market maker's expectations of volatility in the future. So when I look at the SPY and I see that we're trading like this, but VIX is pricing in 30. So they're pricing in a large amount of volatility, which means what? Based on their options prices, that or if I have large volatility, my prices are going to be really large. So what's happening right now at this moment in the market is that you have prices, options prices based on huge volatility, but markets behaving with low volatility or relatively low volatility, but basically the same as they were back in December, right? 1%, 1%, 1%, 1%. What does that mean to you as an options trader? You are paying huge options prices in order to buy your options. But the prices aren't moving. Okay? So if the prices aren't moving, it's going to be very difficult for you to make money on your options, because in options, you need that movement, that immediate movement upwards to overcome your break-even point. So right now, it's really difficult for any option buyer. It doesn't matter if you're buying puts or you're buying calls, or if you're buying strangles or straddles. If you're an option buyer, it is a very extremely difficult environment. So the other way that we can think about it is, if I'm an option seller, if I'm a market maker, I in the business of mostly selling options. So what volatility environment favors me? Well, if volatility is steady, I guess that looks like it's up, but that's supposed to be flat, flat, okay? If volatility is steady, it doesn't matter if it's low and stays steady or if it's high and it stays steady. It doesn't really matter. Prices are in a stable environment and I can make my bid-ask spread, no problem. If volatility is dropping, no problem, because I captured a large premium when volatility was high, and then when it's dropping, that option price is going to go lower and lower, which is in my favor as a seller. If volatility is slowly rising, that's okay, slow rising. That is okay as well, because as the options market maker, I am on top of things. I have AI, I have traders, I have supercomputers, I have forecasting models that take this into account so that my options prices are always giving me some sort of premium in the markets that will overcome any sort of slow rising volatility. So if I go over here, well, right now we're in high volatility, but let's just pretend. Let's just pretend we had slow rising volatility in, okay, monster is fine. Okay, so over here in the extrinsic value, it's all built in. Even options that are in the money have an extrinsic value in them. The size of that extrinsic value is how much buffer that I have as the market maker on how much that volatility can slowly rise and I'm still okay. But I always have a buffer. So the only challenge that presents itself to the market maker is a huge spike in volatility. Rapid, unexpected rise in actual volatility. Because remember, implied volatility is set by the market maker. They're not hurt by that. They're setting the prices based on that. They're making money based on that. So it's actual volatility. It's when VIX is low. Okay, let me get rid of that. So for example, right here, let's take a look at April 2nd, right before Liberation Day. VIX is elevated, but not huge. Okay. And then if we get a huge spike in volatility that was not priced in already in VIX, then that represents trouble to the market maker. So on April 2nd, we had this spike, but it's really 3rd and 4th where we really got it. So we've got, you see that? So the market maker got hurt on this day from April 2nd to April 3rd. So what did they do? What was their reaction? Shoot IV through the roof so that I can widen out my prices and make and charge way more money for my options, because now I have I just got blindsided right here from the 2nd to the 3rd. So notice that VIX didn't spike hugely on the 3rd. It was 4th and 5th where we really got there. But in the market, the actual volatility, not the implied volatility, that 2nd to 3rd was that huge 5% move. Of course, we got another huge move the next day, but what about the second day after that? Actually, we're recovering, and we have a smaller range over here, but that was when the volatility, implied volatility, really spiked. Okay, so it's this dynamic between the actual realized observable volatility versus the implied volatility that the market maker is setting inside of options prices. And we need to know how to work those environments. So right now, because volatility is super high, it is very difficult and probably not very profitable for most people who are buying calls and puts. And you might be saying, Kane, I've been buying calls and puts and I've been making money. Why? Because right now, despite what it may look like, you're in this. You're in flat volatility. You are in very elevated high volatility that is staying high. Okay? So you're not in this huge dropping volatility. So what I will guarantee you is that if you were a buyer of options on this day or this day, or this day, or this day, or this day, you got your butt handed to you. Because here you bought right here and you saw a huge drop in volatility. Here you bought and you saw a huge drop in volatility. Here you bought and you saw not so huge, but still big drop in volatility. But if you've been buying in here, that volatility is just chopping sideways. It's just chop. It might be a big range chop sideways, but it is just chopping sideways. So you can make money in a flat volatility environment as a buyer of options. You cannot make money. I don't care how good of an option or stock picker you are. You cannot make money in the options if volatility is dropping from 60 down to 30. You're not going to make money doing that. It doesn't matter how strong the price movement is, your volatility crush is going to destroy you. It's just like on earnings. It doesn't matter if you pick the direction correctly, because that volatility crush will destroy the value of your options. So it's not unless the price moves so much that it overcomes the market maker's expectations, that where you will actually make money buying a put or buying a call in earnings, as I'm sure Nate will tell you later today. So this is the exact same phenomenon that's happening on an everyday basis in the market right now. It's like we're having an earnings announcement every single day. Okay, so not over here because volatility is not crushing, but over here when volatility was crushing, it's like you were playing earnings every single day and people didn't even realize it. And that's why people were losing money in the options markets, buying and selling calls or doing straddles or strangles, which they think protects them because they can go in any direction. But because the implied volatility was so large and dropping, that's why those strategies weren't working. And we do potentially have some potential for this to drop back into more normal levels, into the 20s. And so we're playing a dangerous game right now with volatility, because if we happen to buy in here and it does suddenly drop into the 20s or into back down to 15, then your option value is going to collapse also. You're going to experience that volatility crush. So as a buyer of options, what is your best environment? Your best environment is the exact opposite, is the worst environment for the seller. It's this rapid rise in volatility. So to give yourself the biggest edge as an options buyer, you want to find opportunities when markets are low in volatility and are about to explode higher. Okay, so that represents your best, and that is what I've been working on the last several months, because this environment that we're in is unusual. It's not going to last forever. It's going to end somewhat soon, reasonably soon. It's not going to last years and years and years. It might last a couple of months or a few months, but it's not going to last several years. So most of the time we're trading in an environment where we are looking for that volatility to start low and expand higher. And that's later on, I'll show you what I've been working on to capture that move, that large move in volatility. Okay, so I haven't been paying attention to the chat. I don't know if there's been any questions. Hopefully that made sense to all of you. And I can take questions if people have them.
Yeah, guys, post your questions in the chat. Kane, there's been a lot of amazing feedback.
Good.
Extremely enlightening, amazing teacher. Nice breakdown, thank you. Yeah, people are very, very pleased with this. Thank you, Kane.
I texted Graham in the meantime. I said, I need to pay attention. I'm actually not sure why the VIX goes down on some of the big updates.
No, very insightful.
So,
and it makes a lot of sense the way you explained it versus how most people assume it works.
Yeah, great. Best lesson I've had on. Okay, yeah, awesome. Great. It doesn't looks like there's more comments and not really any questions.
well, I think it was very thorough. I mean, you really went step by step into the comparison. So I think people got it.
Yeah, awesome. Well,
And Craig, yeah, you can get the recording directly from YouTube after today's session is over.
Awesome. What YouTube channel? Nate, do you have that handy? Let me go ahead and pull that. I always just got to go to the YouTube channel myself. Here is where we post all of our recordings right there. So you can find it there. It'll be up and a little bit later today. Now, I know some of you guys are wondering, you learned a lot. How do we trade it? How do we take advantage of this? Well, luckily, Kane wouldn't leave you empty-handed here. He's got a little plan for you on how to take advantage of what he just talked about without having to pull out a calculator or a spreadsheet and doing all the math on your own. Kane, I know you run some pretty crazy code, some Python, whatever scripts that pull the data and do all sorts of crazy complicated stuff, but you've really simplified it onto easy to read buy and sell signals on stocks. So guys, we'll talk about that today, how you can take advantage of what Kane just talked about each and every day inside your own platform without having to do any sort of crazy math or number crunching. Let me go ahead and see if we're good here. Awesome. Lots of very nice chats here, Kane.
Yeah, thank you guys. I appreciate it. Thank you.
Well, Kane, if you're good with it, I'll go ahead and dive in here. We'll break down
the
tool and how it works.
Yeah, sounds good.
Awesome. Well, my name is Graham Lindman, and today you're about to see a trading breakthrough that's the first of its kind. It's a trading breakthrough that's in a league of its own, and I really, really mean that. You guys just learned so much from this session, and you're going to be mind blown when you see this. You see, thanks to the help of a few math wizards, multi-decade stock trading professionals, and even an extra hand from ChatGPT's artificial intelligence programming unit, well, today's special guest, Kane, who you guys all just met with, he's a former Wall Street legend who helped manage money for a $1.7 trillion firm. Well, Kane has developed a cutting-edge trading software that can identify, calculate, and forecast where Wall Street anticipates a stock to go next. Now, I'm talking a brand new software that taps into one of Wall Street's most powerful predictions models and plots it on your charts. Now, once you have it installed, which takes 2 seconds to install it, it will automatically alert you to the newest stock to buy, telling you exactly when to enter and when to exit. And that allows you and me to get in on the right side of what could be a multi-digit move before the stock takes off. And then hopefully close it out a few days later for what could be a great gain. Here's 134% gain on those options there. Now, the man behind it all, he's no rookie when it comes to trading the stock market. Not only did he manage money for one of the biggest Wall Street firms in the world, a firm that trades at billions of dollars each day, but chances are, if you had retirement savings in the US in the late 2000s, Kane has probably traded some of your money for you, whether you knew it or not. That's pretty wild to me. Now, I'd hate to throw around the term genius loosely, but given his extensive accolades, including studying applied mathematics and computer science in school, learning macroeconomics under Peter Navarro, who's been in the headlines a lot lately, he's the assistant to President Trump, and teaching himself how to perform high-level stock programming with complex coding and custom Python scripts. Well, my guest is definitely an Einstein of his era, especially when it comes to finding money-making opportunities in the stock market. But today, he's unveiling what he's saying is the most impactful discovery of his life. It's a breakthrough that, as far as I know of, no one else has been able to successfully accomplish before today. It's a cutting-edge trading software that can identify, calculate, and forecast where Wall Street anticipates a stock to go next, all by leveraging the same prediction model that Wall Street spends endless amounts of money on to produce. Now, today, you can get it up and running today for yourself if you want to. All you have to do is copy and paste a simple link, and it's a 10-second install. That's it. And then you're done. From there, it will automatically tell you what stock Wall Street is anticipating to go higher next, alerting you exactly when to enter and when to exit. Like here with Carvana, 53% gain in 4 days. What about with NEM? 151% gain in 5 days. Dr. Pepper here, 166% gain, on and on. Now, if you're guessing about what's making this all possible, just hang tight for a minute. Because you can't find these types of opportunities with boring old-fashioned indicators. You can't find these quick-hitting and high-paying trades by glancing at fundamentals or executive reports. And if you're looking for insider trading, whale moves, form fours to get ahead of these moves, well, good luck. Problem is, those buy and sell signals all happen way too late. You see, the key to today's opportunity, it isn't actually found in the stock market at all. It's hiding deep in the options market. Now, that's where we can accurately see what stock or where Wall Street is anticipating a stock to go next. And as you'll see today, thanks to a shocking discovery by my special guest, we're now able to leverage the odds already calculated by these huge investment firms and then front run it with our trades. That allows you and me to get in on the right side of what could be a double or even triple digit move before a stock takes off and aiming to exit right there near the top. Now, my special guest behind today's discovery is none other than Kane Shieh. Now, Kane's a husband, he's a father, and he's also a diehard trader and an excellent teacher. For all of you guys who just experienced that, I think we can all agree he is an excellent teacher. Now, for 2 decades, trading has been his life, having actively traded and managed money at one of the top institutions in the US. Now, it's the reason why more than 100,000 people around the world follow his work. And it's also why many of his top students routinely send in messages like Lorraine here, who said made 228% with Kane on Nike this morning. Scott told us I'm up $1,950 on my closed trades. Don M said, it's hard to be upset with making a 250% return, $3,000 of profit. Thank you, Kane. But today, Kane is raising the stakes. He's pulling back the curtain for the first time ever on a cutting-edge trading software that can identify, calculate, and forecast where Wall Street anticipates a stock to go next. And that allows you to take the trade before what could be the next big move. So everyone welcome my good friend and options expert, Kane.
All right, thanks, Graham, and thanks for having me, and thank you everyone for sticking with us and going through the lesson with us, and for carving out time for this as well. So I promise you, it will be worth every minute. If you like the education, you're going to be really excited about this. Now, we want to remind everyone that not every trade is a winner. Just like with any strategy, there is going to be losers. It doesn't matter how perfect your system is. So remember, you got to be smart, invest only what you can afford to lose, and then we can start growing your account from there. Now, if you do that, then you are in the right place today. For months and months of private testing and countless lines of code, my team and I have created what might be the most accurate prediction system out there. I call it Maverick. Now, the way Maverick works is really different than probably any other indicator or software out there. That's because it's specifically designed to tap into one of Wall Street's best kept prediction models. And we're talking about prediction models that they spend tons and tons of money to produce, tons of energy to perfect and keep on and maintain. And then we take that and we just plot it onto your charts. We let them do all the work, and then we just deliver it to you with easy to follow buy and sell signals. I'll walk you through it all step by step in just a moment and show you everything that's built into the code and why I believe it's more powerful than any other trading system out there. First, let me just say this. If you've struggled in the stock market feeling like you're constantly taking 1 step forward and then 2 steps back, it's really not your fault. Most people are taught to rely on technical indicators, chart patterns, fundamentals, or even what politicians are saying in the news to make their tradings. But the truth is that those are all lagging indicators. They're great at telling us what happened in the past, but they can't accurately anticipate what's coming in the future. So think of it like this. If using lagging indicators, you're driving down a busy road only using your rearview mirrors. And sure, that can work for a little bit. You might make it a mile or two, you might make it down the street, but eventually you're going to get into a wreck. It's the same thing with the stock market. You might make a decent trade here or there by using lagging indicators, but you'll probably never really be able to make and grow an account with those outdated methods. So after years of seeing firsthand of what really moves stocks, working behind the closed doors of one of the largest institutions in America and in the world actually, where billions of dollars were traded each day, I've discovered that the most profitable trades don't come from looking at the stock chart at all. I never did when I was a pro. They come by tracking Wall Street, specifically in the options markets. And because of a little key hidden in the options market, we're able to look ahead to where Wall Street anticipates a stock will go next, then place our trades based on that. And that's exactly what Maverick is designed to do. It's designed to track Wall Street's subtle moves in the options market to tip us off on what stock could be rocketing next. For example, let's take a look at what would have happened on Take-Two back in October. Now, going into the month of October, it was a great time for stocks. All the major markets were up. S&P was up 6.1%, NASDAQ up 9.3%, Bitcoin was up almost 20%. But Take-Two couldn't have looked any worse. It just wasn't participating. It was in a multi-month downtrend. And for investors, I'm sure it was really difficult holding on to that because there seemed like there was no reason, there's no bad news about it. But on October 16th, didn't really matter at all. Thanks to an overlooked signal that I'll share with you, a signal that came from the options market, Maverick posted a buy alert on Take-Two on October 16th. Of course, you would have never seen this buy signal using lagging technical indicators. The RSI was in the middle of nowhere in no man's land. Stochastics went above the upper line, then crossed back over. So that was saying that momentum was fizzling out. And at the same time, Take-Two had clipped the upper range of the Bollinger Bands, meaning that it was supposed to bounce back down towards the middle of it. But unlike those outdated technical indicators, only looking at what happened in the past, on October 16th, Maverick saw that something big was about to happen in the future, and that Wall Street was anticipating that this stock was going to go higher. So folks could have jumped in, taking about 30 seconds to set a trade, and sure enough, the stock popped. 6 days later, folks could have cashed in when Maverick issued the sell signal and locked in an 88% gain.
Kane, that's nearly a double. And that happened while most investors had already written the stock off. Remember, the markets were going higher and this stock wasn't participating. But when you followed Maverick's signals, $500 invested into that trade could have turned into $940 in under a week's time. If you started with $1,000, it would have been $1,880 before the next paycheck hit. But folks, it gets even better because Take-Two wasn't the only opportunity that Maverick picked up on October 16th. There was another entry alert that same day. This one was on Apple, one of my favorite stocks out there. Anyone who placed a basic options trade when Maverick gave you that green light, very simple up arrow, can't miss it. You could have splashed in with a 182% gain in only 48 hours when Maverick said it was time to sell. Not bad. Now that would have been enough to have turned $2,000 into $5,651 in what felt like no time. So Kane, you have to tell us more. You mentioned that we could only see what Wall Street is anticipating for a stock by first looking in the options market. That's very unusual, and that's not by looking at technical indicators, not fundamentals, not chart patterns. Can you explain why?
Yeah, absolutely. So I'll walk you step by step and show you how a simple realization about the options transformed into an entirely new way to forecast where a stock could go with remarkable accuracy. Accuracy as high as 85.6% over the last 30 years of data. But before I show you how it works, first I need to take you back to where it began so you can really grasp how powerful this is. So earlier this year, I was running a private training session with some of my most advanced students down in Ponte Vedra. And one of the students asked, how do we know if options are expensive or cheap? It was a great question, and it was a fundamental question that eventually led me to today's big discovery. Because once we can accurately identify if options are cheap or expensive, we can then see what Wall Street is anticipating next for the stock. Now, when trying to gauge how expensive or cheap an option may be, most traders will typically look at the implied volatility, also known as IV. IV helps us estimate how much Wall Street thinks a stock will move, and it's baked into the price of every option. IV is typically shown as a percentage, and when it's really high, that typically means that prices are inflated. They're really expensive. And when IV is low, then most people assume that means that options are cheap. But here's the thing, we need context. Numbers mean nothing without context in the markets. So for example, let's say that we're looking at the options on Apple with an IV currently at 40%. At first glance, most people would assume that Apple's options are cheap. They're a good price at 40%. But the real question is that high for Apple or is it lower than normal? You see, before knowing if options are trading for cheap or expensive, you have to consider what it's normally priced at, and that's what we know as the baseline IV. If Apple's baseline IV usually sits at 80%, then yes, right now at 40%, it's a great deal and options are cheap. But if Apple's baseline IV is 20%, well, that means the current price at 40% is overpriced. And they're actually twice as expensive as normal. You see, it's not really about the number, it's about the current number and where it is relative to the stock's baseline number. And as you will soon see, it was this simple aha moment that led me to the big discovery powering Maverick. Now, this is the first piece of the indicator here, and it's exactly what we talked about. It tells us where the stock's current volatility is trading relative to the baseline. And when you see one of these red bars, that means that options are more expensive than normal. But the green bars signify that options are trading for much cheaper than normal. And that's really important to us. Because once we first know when options are trading for cheap compared to the baseline, we can then see where Wall Street is anticipating a stock will go next. For example, take a look at what happened in VeriSign back in January. Now, to start the year in January, while most stocks were going higher off of election euphoria, VeriSign was stuck in a sideways rut, not a super exciting stock to be trading. However, on January 21st, Maverick flagged that options were trading for dirt cheap. And thanks to a telltale sign that we'll share with you next, Maverick would have alerted you that Wall Street was anticipating that the stock will go higher. Sure enough, anyone who traded this stock would have captured a 5% move in just the stock by the time Maverick issued a sell signal. And had you taken one of the dirt cheap options, you could have banked 119% ROI on that move. That would have been no different than watching $500 to turn into nearly $1,100 in just a few days, or $1,500 turn into $3,288. Now let me show you that again, but this time with Copart in February. Now, I think everyone remembers the sentiment back in February. Inflation was picking up. We started talking that the first whiff of tariff was started to hit, and S&P was off to one of the worst market drops we've seen in the first quarter in over 100 years. And it was no different for Copart. It was trading about 10% off the recent highs. But on February 3rd, that didn't really matter, because as you can see with Maverick on the chart, the options on Copart were trading for cheap. And thanks to a little known signal in the options market that I'll show you next, Maverick knew that Wall Street was anticipating that the stock was going to make a sudden move higher. And on February 3rd, Maverick would have immediately alerted you that it was time to buy. And anyone who traded this stock here could have grabbed a nice 4% move on the stock in only 4 days. And with dirt cheap options, that would have been a 74% gain.
Well, Kane, $2,000 into that one could have turned into $3,492 in only 72 hours. Now, I'm sure no one here would have complained about that. I think we all would have loved to open up our brokerage this morning with an extra $1,500 in it from that quick trade there. But as exciting as that is, we're actually not done with Copart just yet, because just a few days later, February 10th, the options were trading for cheap again. And here you can see it. Maverick gave another entry signal on Copart like clockwork. So we had the first trade here, and then just 2 days later, another entry signal. And by the time Maverick gave the sell signal, well, folks, you could have booked a double, 107% ROI on the options. And guys, it's not like these trades would have cost a fortune to get in either. Remember, Maverick is automatically finding trades where the options are trading for dirt cheap. And that already gives us a huge advantage. So for example, here, you could have taken that first trade on Copart with as little as $63 per contract, and the next one, only $70. Now, small account or big account, it doesn't matter with Maverick. So Kane, I understand that Maverick is looking for options prices to drop below their baseline number, right? And then it's alerting you when they're dirt cheap so that we can enter for pennies on the dollar. That sounds really good, but I guess that still leaves me wondering, how does that help Maverick forecast if the stock is actually going to go up or not? I mean, just because the options are trading for cheap, that doesn't mean the stock is about to rocket in price.
Yeah, that's exactly right, Graham. Just because options are cheap, it doesn't mean that you should buy them. So once you know how to compare the options relative to the baseline, then you can get a clear picture of what Wall Street is anticipating next. You can actually see what they are predicting for the future. So over the years, last few years actually, since COVID, options trading volume has exploded. It's to the point now where you see routinely that the options traded in the stock outshine the volume of shares that are traded in the stock on any given day, which is crazy. So this is forcing Wall Street to be more proactive at adjusting their options prices ahead of a big move, completely tipping off their hand and showing us what their cards are. Now, when I say Wall Street, we're not talking about any old hedge fund or even a whale like Warren Buffett. No, this is a much bigger player In fact, no options trading can happen without them. And of course, we're talking about the market makers. They're the ones who set the prices for each and every option out there, and then they sell them to us. Now, obviously, when they're calculating what the price of an option should be, they're not making a random guess. They're not shooting in the dark. They have huge teams, trade desks, algorithms, AI, supercomputers, all to calculate the value. It's their job to predict the future and then price it into the options accordingly. If the market maker thinks a stock is about to make a big directional move, now here's where you pay attention to the lessons earlier, right? This is where it directly applies. The options market maker, when they anticipate a large move, they start to increase the price of options ahead of time, which in turn increases the implied volatility of the options. Why? Because big moves mean more risk for them. So they want to generate more premiums in order to take on that risk. However, if they think a stock is just going to drift sideways and chop around and go nowhere, they start dropping the prices early on because they've already calculated that the risk of a stock making a big directional move is minimal. Now, here's what's really important. These small adjustments by the market makers oftentimes precede the stock's next move. You'll see the market makers start to decrease the price of options just before a stock stalls out. And then on the flip side, you'll see the market makers start to increase the option prices right before a big move. And that's exactly what Maverick is looking for. We want to see when a stock's options are cheap, and then at the same time, options start to rise. That means market makers who often see things before the rest of us are anticipating that something big is coming. And that's when Maverick strikes. Not when the move was obvious, not when the options are already expensive, but right at that inflection point when things are just beginning to shift. That allows us to get in while options are still cheap, right when the market maker shows us that they are anticipating a big move is about to happen. So that example that you just saw on those charts was Walmart stock. And anyone who took the dirt cheap options could have cashed out with an incredible 335% gain on a blue chip stock, which could have been more than enough to turn $1,000 into $4,351 or $2,500 into nearly $10,900. But let me show you another example, this one on Howmet Aerospace. Keep in mind that over the past year or so, HWM was one of the strongest stocks out there. And it definitely looked like a great stock to buy on any pullback or breakout over many months. And going into January, it looked like another pullback opportunity, an excellent buying opportunity, right? But unfortunately, anyone who rushed in to buy the dip over there based on lagging technical setups would have been very disappointed because the stock just flatlined and traded sideways for weeks. But then on January 8th, that changed. As you can see, not only were the options trading for dirt cheap, but also options prices started to tick up in value, which meant that market makers were anticipating a big move. And of course, Maverick would have alerted you to this buying signal on January 18th, avoiding all that chop. Anyone who followed along could have scored a 139% gain on the options when it told you to exit. Here's another example, this time on Monster Beverage. Going into November, this stock was looking at a total dud. And on November 8th, though, Maverick flagged a buy signal. Why? Because again, not only were the options dirt cheap, but the market makers were subtly starting to adjust their prices higher, meaning that they were anticipating a big move was on the horizon and they wanted to get ahead of it. So you could have jumped in on the signal when Maverick would have alerted you by hitting a few buttons. And then just 3 days later, you could have cashed out with a whopping 173% gain on the trade.
Kane, this is really remarkable stuff. I mean, what you've done here with Maverick is unlike anything I've ever seen before, and it makes total sense too. By leveraging the volatility data, right, which we just did that whole class on, that directly affects the options chain, you're able to see when market makers are predicting a big move. And it allows us, you guys tuning in right now, you have a shot to get in early before anyone else even has a clue that a big move is coming. And don't let me forget to mention, because the options you're trading are already so darn cheap, you're also able to turbocharge the gains. That's a win-win-win. That means your options returns are going to look much bigger than the average Joe. Where even just a small $500 invested into these last three trades you showed us, that could have really stacked up big. All in all, that would have been $3,241 in profit after only three quick trades. Not bad. And that's with the $500 starting stake. Imagine starting with 5 grand, you'd be 30,000 in profits. Imagine starting with $1,000. That could have been $6,000 in profit without any sort of compounding or rolling the profits. Now, Kane, I realize this is brand new and you haven't shared this special discovery before this broadcast, but that reminds me of what Henry S. said about your work. He said, Kane, you're amazing. This morning I cashed out with about $7,000 in profit. And it's not like he's the first student to hit it out of the park from your work either. Daniel M. said, close my options for a 300% win. Thank you, Kane. That reminds me of that Walmart example you showed. Or how about this testimony from one of your students? Made a little over $10,000. Thank you, Kane.
Yeah, those are some of the very best stories that I've heard from folks who've followed my various work in the past. Now, of course, I want to remind everyone that not every trade will work out. Like with any strategy, there's bound to be big wins, small wins, and even losers along the way. That's just part of trading. So you should never go all in on any single investment and never risk more than you can actually afford to lose. But that's where Maverick takes it up a notch. You see, just because market makers start increasing the prices of options in the market, that doesn't necessarily mean that they think the stock is going higher. It just means that they're expecting the stock to make a big move in the near future. Now, that could be a big move up or down, so identifying when the options prices are increasing in value isn't enough to confirm our entry. That's where the second piece of Maverick comes in. With this custom study, down here that you're seeing, what it does is it tells us if the move is expected to be bullish or bearish. When the line shows pink, that shows us that the market is expecting a big move lower in the stock. And when it's bright blue, it tells us that the market is expecting a move higher. It's the final confirmation that we need to verify the trade that we want to make. Because when both align, that's when Maverick really becomes practically an unstoppable force. In fact, it took our win rate all the way to 85.6% on over 30 years of data. To put that into perspective, that's better than winning at 8 out of every 10 trades. And that gives us a multitude of high accuracy trades one day after the next. Now, this screenshot is on McDonald's back in September. You can see that by aligning the market maker activity with the direction that the market is predicting for the move, Maverick was able to spit out not just 1 or 2, but 4 back-to-back winners in just a matter of days. So let me walk you through a more recent example on McDonald's to show you just how powerful this really is, even in the middle of market chaos. Jump with me back to the end of February, going into March. Now, I hate to bring it up because I know it was a painful period for a lot of people in this room. In fact, I'm sure that a lot of people are still feeling black and blue and trying to recover from the beating in the portfolios. The S&P, NASDAQ, Dow Jones, they were all getting pummeled. And almost every single stock in the market was bleeding out, just a sea of red. And while McDonald's wasn't taking the brunt of the blow like most of the tech stocks were, it didn't look that pretty either. However, on February 27th, Maverick plopped a buy signal onto the chart. And as you can see, options were trading for cheap with the market makers adjusting them ever so slightly higher. And the market was anticipating a bullish direction on the move as designated by the bright blue line. So anyone who placed a quick trade to follow along when Maverick would have told you to enter could have seen a 330% gain on McDonald's options. Enough to have flipped $2,000 into $8,600 plus in 8 days. Let's take another look, this time at Lamb Weston. There you see Maverick's entry signal on LW on October 2nd. Market makers were quietly adjusting their options prices higher, and the market was favoring a bullish move on the stock. Anyone could have jumped in on this opportunity by clicking a few buttons and hit it out of the park with a 207% gain.
Kane, I really love what you've done here. Instead of using outdated lagging indicators that can only tell you what's happened in the past, like most people do, well, Maverick is now leveraging what's happening in real time based on the volatility affecting the options market. And that tells us what Wall Street is anticipating for the future. Now, unfortunately, guys, if I wanted to do this at home on my own, it would be impossible to keep up. You guys saw just how much information Kane presented earlier and how time consuming that would be to track on each individual stock. And that's because there's simply too much options data for any one person to handle. And that alone leaves most folks completely in the dust. But that can all change for you today, because today, for the first time ever, Kane is putting it in the hands of the everyday person, the people who need it the most. And I highly recommend that every single person who comes to the opening playbook gets Maverick on their charts. And Kane, you've made it easy as cake to use, all done for you, all in one automated system. For example, let's look at one more trade here. This one on Fastenal, ticker FAST. There you guys see the entry signal, done for you, automated. You don't have to do anything. You want to look down below, or you can see the market makers starting to price in a big move. Cheap options ticking up, up, up. And then also that second confirmation anticipating a breakout to the upside. So Maverick gave you the entry, it gave you the exit. And if you followed along, look at this, 484% overnight on these dirt cheap options. Now, $1,000 in that one could have turned into $4,846 overnight, and that would have been a profit of $4,800. Now, imagine that. Imagine waking up, checking your phone, and seeing a few extra $1,000 in the account. That would definitely be one heck of a feeling. And folks, that is the power of Maverick, and that's why I think everybody who attends these opening playbook sessions needs to get Maverick on their charts.
Yeah, that's exactly right. And once you're able to find optimal entries for highly accurate trading, the last thing we had to figure out was how to exit. And given my decades of experience, that was the easy part, far easier than figuring out the entry. So by applying an average true range calculation on the current net momentum of a stock, Maverick tells us exactly when to exit. That way, we're never trading without a plan. And folks, the beautiful thing is that you don't need to go manually sort through thousands of stocks to find these entry signals. We built the system so it'd be easy as picking 1, 2, 3. We have a chart on the right. We have today's buy alerts on the left. You click on a ticker in that buy alert and the signal will pop into your chart on the right. And that's all there is to it. If you like what you see, you can set a quick trade in order to jump in, and then simply close out when Maverick tells you it's time to exit. It's all done for you, like with Cigna back on February 21st. On the automated scanner, you can see it right there. There's a clear buy signal when you click on it. 140% gain in just 3 days. Or like Molina Healthcare, April 2nd. Now remember, that's Liberation Day. So the announcement wasn't made until the market closed. So when you got this signal, you had no idea about what Trump was about to say on Liberation Day. You got a signal buy alert, a long alert on Molina Healthcare. You see that signal right there on the trade. And overnight, when the S&P gapped down and traded lower by 5% and one of the worst drops overnight in history, Molina Healthcare, off the Maverick signal, made 163%.
That is awesome. Kane, I love it. With the Singa and Molina examples alone, $2,500 starting out could have paid $7,609 in profit on 2 trades without any sort of compounding. Now that could have been an extra $7,000 folks could have pocketed without having to pick up overtime works or work the weekends. It's actually kind of fun. Trading is fun. Imagine having fun and making that kind of money. And keep in mind, that's after only 2 trades. Just by glancing at the scanner here, you can see there's a whole lot more opportunity at hand each and every day.
Yeah, the opportunities are virtually endless. On any given day, the scanner will pick up between 2 to 5 excellent trade entries, meaning that you don't have to wait days or weeks to get into your first trade. If everything works out as expected, your first Maverick winner could happen right away. Listen, with all of my career accolades, people in hearing the stories from people like Scott and Don and Lorraine and many others, nothing I've ever done comes even close to the power of Maverick. I can honestly say that. And today I want to pass it on to folks tuning in to this broadcast right now. Today I want to invite you to take action and join me with your very first trade using the all-new tool, the first of its kind, Maverick. Everything you need to get going today can be found in your Maverick Getting Started guide. You'll find step-by-step video instructions to get you up to speed in no time. And the beautiful thing is there's no real install needed. All you have to do is copy and paste a link. It literally takes less than 10 seconds and a few clicks of your mouse. After that, you're good to go. The newest entry signals will be auto-populated for you on the left-hand side of the screen. And then it's just point and click and then trade. Now, currently I have Maverick programmed to run on Thinkorswim or TradingView, whichever you prefer to use. That way, pretty much anyone in the world today can access the powerful signals starting today. And if you need any assistance, or our US-based customer support team is standing by to answer any questions you might have. But that's not all. Once you have it set up and ready to go, I'm also going to train you on how to use it the way that I use it. In the coming days, we had a masterclass on Tuesday. We're going to have another one this coming Tuesday. There will be ongoing masterclasses where you can ask me any questions that you have about Maverick. I'll walk you through Maverick one step at a time. I'll show you how to pick up the new trade signals every single day and how to select options, the criteria that I like to use in order to trade these signals. Of course, these sessions will be recorded and placed in your members area if you can't make it. The first one's already up there. The truth is, due to time constraints, I've only scratched the surface of what Maverick is capable of today. And you can probably guess, Maverick can also forecast moves to the downside as well. And for those of you who like trading short or buying puts in the stock market when Wall Street is anticipating a drop, we've got you covered.
Well, Kane, this is really important for folks to have. I mean, especially in these market conditions where it feels like a coin toss out there. We don't really know, are we going higher from here? Or are we going lower from here? Well, that's why Maverick's got you covered. And just by looking at the data, it even picked up on some really red hot opportunities to the downside in the recent drop. Like here, guys, Netflix, 229% on Netflix puts in April. Look at that easy sell signal and exit. And then a huge hit here on Qualcomm in March, 301% gain here on March on Qualcomm puts. And I bet you we all wish we could go back and have this on our charts during that recent drop. I bet you there were some 10x paydays and even higher. Now, that one there on Qualcomm would have been enough to flip $1,500 into $6,000 on a falling stock.
Yeah, that's a powerful addition to Maverick. And of course, we've also built a scanner for downside moves too. And that way you don't have to dig around to find these trades. And there's even more to this system than just that. My team and I finished another feature that I'm dying to showcase to the new members. And that's one that will give you more high conviction entries on top of the ones that you're already going to see. In fact, it actually increased our profit factor, which is not easy. It's not easy to move a profit factor, but it increased our profit factor by more than 30%.
That's amazing.
And that means for new members today, not only are you getting access to the most accurate prediction system that I've ever seen or built, but ongoing upgrades to it as well. And of course, I'm going to coach you on how to use all of it.
Well, Kane, the value for this all new trading tool is through the roof. Now, it shouldn't come as a surprise that we had Kane set the retail price at $3,000 per year. I think that's more than fair. And if you try to sign up through the main website, that's the price you'll see today, $2,997 for access to Maverick. And even though it's the first time, this week has been the first time you've opened enrollment for this, I think that that's more than a fair value considering the success we've already seen from folks following your work. Plus, anybody with access will now have plenty of trades to choose from on a daily basis. Like you said, the opportunity is virtually endless with Maverick. But here's the deal, guys. Kane wanted to do something crazy, something I still can't believe we agreed to do, because you are here right now tuning in for the opening playbook today. Instead of paying $3,000 per year for access to Maverick, Kane wanted to do a one-time founding members discount and slash the retail price way, way down. So instead of paying $3,000 today, you'll be able to secure your membership for $1,794. But we're not done just yet. He then wanted to do it again, slash the price again by taking it half off from there, meaning the new members who join today right here in this room, it's only going to cost you $897. But that's not even all. If you join right now here in this opening playbook webinar, you're also going to get upgraded to lifetime membership on the house. So instead of seeing $3,000 for 1 year today, you'll be able to get lifetime for just $897. One-time payment, no renewal fees, no recurring fees, nothing like that. You pay today and you've got it for life.
Yeah, that's right, Graham. It's only $897 for lifetime access today, but there is a catch. The deal is only open to founding members who take the next wave of open membership spots. We already sold out earlier this week, so we had to increase the price and then sell out another 217 left now, founding member spots at this price. If we sell out, we're just going to have to do it again. Enrollment shuts down at this price, and I can no longer guarantee this particular incredible discount. If you're ready to become one of the first now 217 traders in the world to secure access to the all-new Maverick and save thousands of dollars on your unlimited lifetime membership today, get ready to click the link in the chat. This is early bird deal for the first 217 founding members now. And spots will go quickly. The link, I see Raleigh already dropped the link. Nice. Thank you, Raleigh.
So there you go, guys.
Yep, go ahead.
Oh, I was going to click that link in the chat, guys. Well, Kane, this thing is so hot. This is one of the hottest things we've ever seen here, we've ever done. Obviously, it's so unique in what it's doing, what it's looking for. First 299 spots went like that. So then we had to reopen the price at a little bit higher. So it's $50 more. So I talked them down. We said, let's just do $50 more and let's get that next wave in. But these spots are going to go like that too. And then the price is just going to keep going up from there and there. So guys, Raleigh posted that link in the chat. Click that link in the chat right now. Get Maverick on your charts today. Don't place another trade before checking with Maverick. This is looking at something that none of your other indicators are looking at. It's a really, really powerful tool. And it's really, I love what you showed there with the options volume now leading stock volume. Very, very common to see that. So most of those technical indicators just aren't even going to work anymore. That's why you need Maverick right now to kind of get that deeper look under the hood. So click that link in the chat to get started or give us a call at 904-706-3539. So guys, there you go. The information's there at the top. All of the details of your new Maverick membership are on the next page. And when you take one of those founding members, again, sold out initially, had to bring it back at a little bit higher price. It's still an amazing deal for you guys today, but these spots are going to go quick. Price is going to go up from there. So lock it in right now for that cheap discount. You get the lifetime membership. You get over $2,000 in savings. And don't miss this rock bottom price to own Maverick for life. I would hate for you to have to pay more when the new wave of founding member spots are gone. So click that link in the chat to get started or give us a call, 904-706-3539. They'll get you taken care of. Again, limited time membership here. Kane has already let in the first batch of traders. They did the masterclass that is recorded for you up in the members area right now. And then there will be another class that you can join with Maverick on your chart. You guys will go look over Kane's shoulder and maybe do some trades together. Remember, this is an unlimited lifetime access to Maverick, so you don't want to miss it.
Yeah, and we have an important announcement as well. If you've been following me lately, you probably know that I've been actively monitoring the options market to find new trades for quite a while. And I've actually hit some really epic gains on real-time trading so far, like with Shopify 193%, Meta 126%, Snowflake with 334%, and CrowdStrike with a 300% gain. Even Dexcom to the downside, we had an epic 1,122% gain. And I would love to spoon feed you these types of alerts. So here's what we're going to do. After you secure your Maverick founding membership today, do not exit the next page. As one of today's founding members, you will have the chance to opt into Gamma Pocket payouts for an extra $2,000 off the retail price. And there you can get 1 to 2 personalized trades directly from me with options criteria selected as well. In fact, based on our average winner so far, a small $2,000 stake, one trade would have more than covered the entire Maverick membership fee. You read that right. So because of this new way of supercharging options, as shown by the average winner of 72.5%, that means if you took $2,000, then got an average win, you would make $1,455 in profit. So it's a new way to supercharge the options. It's so good that after the first year and a half trading, we've got a 73.3% win rate across over 105 trades. That's with a starting stake with 1,000 in each of those trades without compounding would have paid $41,769 in profit. And after today, I want to officially open the doors again for new members to join Gamma Pockets today. Once you lock in your founding membership to Maverick, you'll then see all of the details of how to get upgraded.
That is awesome. Awesome stuff here, Kane.
Yeah, thank you. Yep.
So guys, click that link in the chat. Raleigh's just posted it there. Guys, lock in Maverick today. It takes like 10 seconds to install. I did it on my end. I think it took me 2 seconds. But if you're slow, it'll take you 10 seconds, which is still lightning fast. There's no code, no confusing downloads needed. Guys, click that link in the chat to get started, or just give us a call at the number you see there on the screen. The team will happily take care of you. And then if you want to get personalized trade alerts from Kane too, on that page after you join, there will be an opportunity to upgrade and get Gamma Pocket payouts where he'll send you specific options trades as well. Now, Kane, let me ask you a few questions before we pop into the chat. And yes, guys, we are going to jump in the chat here and answer your questions. So if you have questions now, please start posting them right now. We want to get to them right away. But first, let me ask you a few of the common questions. Is this only for Thinkorswim?
No, nope. We coded it and we made it available for TradingView as well. That means if you're outside the US, you can still start using Maverick right away. And if you prefer Thinkorswim, like a lot of people do, it just takes actually, no matter if it's TradingView or Thinkorswim, it only takes a few seconds. It's just copy, paste, and then that's it.
You made it really easy for folks. And guys, if you don't have Thinkorswim, you don't even know what that is, don't worry about it. Just go to TradingView. You can access that anywhere in the world from a web browser. Nothing crazy downloaded needed. So that's really nice that you've made it accessible for everyone there. Kane, if I'm a beginner, is Maverick a good place for me to start?
Absolutely. So Maverick gives you a huge edge with a clear structured framework. It gives you the entry, it gives you the exit, it gives you basically a plan. So in my opinion, it's as more and more volume shifts into the options market, it is going to be critical to take options into account in the future. You're not going to be able to trade accurately without it. And Maverick is the first that I've seen that actually looks to the options market to forecast what's going on.
Awesome. Well, we've talked a lot about options today. Do I have to trade options with this?
No. So just because we're using options to forecast where it's going to go, we are still talking about the underlying stock here. So if you just want to trade the stock, you can trade the stock. If you want to trade basic calls and puts, you can trade basic calls and puts. If you like other types of strategies, different types of spreads, you can trade that too. It's completely up to you.
Perfect. So you guys can do the stock or options, whatever you like to do. Basic calls, you can do spreads. I like spreads. You can do spreads, but whatever floats your boat, you can do here with Maverick. Now, what if I want to trade to the downside? What if I think stocks are going lower? Is it going to help me find those opportunities?
Yeah, absolutely. The team and I custom programmed the tool to work in both directions. So if you like those puts or you like shorting stocks, you can do that as well.
Awesome. Awesome. Now, what if I have questions about how to set up Maverick?
Well, if we have that customer service, our US-based support team is trained and standing by ready to help. And for some reason you can't get Maverick working on your trading platform, you do have 7 days to call our team. And in the rare chance that they can't help you, I'd be super surprised if they can't help you. Mm-hmm. But if it does happen, we'll give you back every penny of your membership cost. Also, the team is live in their trading room Monday through Friday, 10 to 1 Eastern. So you've got 3 hours a day to join them live for hands-on help and through a Zoom portal.
And guys, that's a huge, huge benefit. I don't know of any other company out there who's set up this level of support every single day, guys, from 10 to 1 p.m. You don't have to show up at 10. You can show up at 11:15, whatever time works for you. Get in there. They're live with you in a Zoom room just like this, same setting like this. They're screen sharing. You ask them, how do I install Maverick? They will walk you through it step by step on that call. And it's fun. Sometimes they're doing trading in there. It's a lot of fun. There's a lot of good people who join. It's a good little community there. So guys, click that link in the chat to get started with Maverick. This is a limited time deal. Every time we sell it, the price is going up, and away. Eventually, Kane, I think we discussed we want this to be around $2,000, which I think is still an amazing deal. Even if you guys see this next week at $2,000 and you didn't get it, it's definitely worth every penny. But right now, if you guys take action today, if you're one of the next, probably under 200 spots now, it's only $897. That's not per year. That's not every 2 years. That's for lifetime access, guys. It's a one-time payment, and you get Maverick for lifetime, including all future upgrades. All the live masterclasses coming up. And a little surprise for you, Kane decided he wanted to do this. He's actually going to give some folks, anyone who takes Maverick today, you will actually get a beta free trial. It's about 30 to 45 day trial to get option signals directly from Kane as well. So that's just a little special bonus. Private Telegram he's set up. If you guys are currently a member, you go check your members portal because I think you just did that yesterday. Well, anyways, guys, that's about based on what we charge for normal alert services, that's about a $2,000 upgrade that he just included for free. Now, it is a trial just to get you guys some winners to help walk you through the trades to get you started. But guys, once you join today, you can get that as well. Now, remember, folks, outdated technical indicators, those are ancient history. That's because over the last few years, options trading volume has exploded. It's to the point now where we'll routinely see more options traded on a stock than shares on any given day. And this is forcing Wall Street to be more proactive than ever before, adjusting the options ahead of a big move. And that completely tips off their hand, shows their card to us. Like Kane showed us, guys, we'll oftentimes see market makers decrease the options prices before a stock stalls out. They're doing it ahead of time. You can't look at it in the options chains, and unless you're able to track one stock on paper and spend all your time on maybe one stock, you might be able to do it. Maverick does it for you all the time, all day long. Tells you this in advance. And on the flip side, you'll see the market makers start to increase the options prices before a big move. And that's exactly what Maverick is looking for. Kane, walk us through this one more time, step by step.
Yeah, so like we told you guys a little bit earlier, what we want to see is that when the options are cheap and then those option prices start to go higher because the market makers see something that we don't see, and they're right pretty often, right? They're market makers. They couldn't be in business if they weren't right 80, 90+% of the time. And they're telling us that they're anticipating something is about to move. And that's when Maverick strikes. Not when the move was obvious, not when the options are already expensive, but right at that critical inflection point when things are just starting to shift. That allows us to get in first cheap, right when the market makers show us that they're anticipating that big move is coming, which could be enough to turn $1,000 to 1,400, or sorry, 4,300,
even better,
and 2,500 into nearly $10,900.
And Kane, like you showed us, there's an endless amounts of examples. Like this guy's 207% gain here on LW. Again, it gives you the entry, it gives you the exit. No, you don't have to just randomly punch in tickers all day long and hope for an entry and exit. It's got the built-in scanner too that tips you off. So you would just see LW on the left side of your screen. You click it, bam, you see the entry and you can trade it. Now this one would have been enough to turn $1,000 into 3,070. Could have bought you Maverick for you and a friend with that kind of profit there. How about here, 330% gain on McDonald's, enough to have flipped 2K into $8,600. And then there's these three big winners that we saw just recently, 139%, 173, 335%. Just between those three, that could have been $6,483 in profit without compounding. Oh, guys, and there is plenty more examples, 53%. 151%, 166%, 484%. We can go on and on all day long showing you how Maverick works, how it's done in the past. But guys, only the folks who take action right now, who click that link in the chat to get started, are going to see today's new entries. They're going to be able to see the entries, exits, and they'll also see the short opportunities all done for you, all teed up on the scanner with the entry and exit signals. And of course, guys, Kane has that first masterclass recorded. He's got some training in the members portal. And he also is going to have another masterclass for the new members. So, Kane, thank you so much for being on today. I know we've been going for almost 2 hours now. You brought the meat this morning with all of that training. Guys, let's all give Kane a round of applause here in the chat again. And then let's pop open this chat, Raleigh. I know you're here in the background. Let's get some of these questions answered so we can get Maverick up and running for folks, get it on their charts right away.
Yeah, sounds great. Kane, fantastic presentation. And as a matter of fact, Graham, to have him there during your opening session, and Kane, for you to take that literally a half hour to explain volatility and the VIX, the correlations, the myths associated with that. At the end of the presentation, I was sitting there going like, there's no way I'm going to be able to figure this out for myself. And then you turn around and go, well, you don't have to, because I've built and coded a platform that does it all for you. So I think the fact that you included the education with this was just amazing. And there were some great questions that came up. The one I really liked the most, because I had the same question, which is this: how and where do the market makers get the data that indicate that there might be a big move? I mean, what is tipping them off?
There's a lot of things in the markets. And of course, a lot of it is proprietary. And I have had an inside look at some of it, but not all
Okay.
of it. So Wall Street firms, they're when it comes to their data and their code, they're highly compartmentalized. They
Okay.
do everything that they can to not show any one person absolutely everything, and that just protects them because people move shops all the time,
Okay.
and they have those little encrypted little dongles that you put in your computer. Like it has to
Yeah.
have a secret pass key, and like everything gets recorded, who downloaded what, and it is like CIA. You're in the CIA, and they're protecting all that data. So I do have some insight of what they look at, but obviously I don't have the entire picture either. I don't think anyone does, not even like a CEO or anyone would have
So
the
they're
entire
so they're
picture.
doing that really to
So
protect their investment in all these proprietary systems, right?
exactly. But what I can tell you is that they do a combination of historical data plus a whole, like an incredible amount of simulation. And so they take all the data that they have and they run millions and millions of scenarios and simulations. And then they assign probabilities to each of the possible outcomes.
Wow.
And then that's why everything is with a confidence number or everything is with a standard deviation number. It's never
Sure.
100%. It's always 68% or 72% or 80% or 93%. It's never 100% because everything, when you're forecasting, obviously you can't absolutely know the future, but they are running all of those simulations and crunching tons and tons of data to output it through their models and come up with that forecast. And as you can imagine, it takes a lot of work. It takes supercomputers to spit this stuff out,
You bet.
and they're pretty good at it.
Yeah, exactly. Because once again, they're called market makers. And so
That's
it's a
right.
fair question. So the direct answer is these firms have developed and spent millions of dollars creating systems designed to analyze what's going on, what's likely to happen. And that is in the sole possession of those companies. And the market makers use that when determining when there could be a move. But the cool thing is you catch it. You capture
Yeah.
it because you start to see those incremental movements in the price of the options.
Yeah, and you don't, and the cool thing is we don't need their model because the
Oh,
market maker shows it to us.
yes.
They don't intend to, but they show it to us, and we're able to interpret that data and just say, oh, this is what they're predicting for the future. And so we don't need to have their formula or their supercomputers. We can just look at their results. It's sort of like McDonald's. McDonald's does all the research on where to build the next location, and then Burger King and Wendy's and whoever just plops a store right next to them. And we're sort of doing the same thing to Wall Street.
Outstanding. So, some more questions that came up here. I thought this was a good question because, once again, it's pretty clear that Maverick is going to say, here's when you get in and here's where you get out of the trade. But Daphne says, hey, in those times when the trade's working against us, how do we know when to exit a losing trade?
Yeah. Okay. So I go over this in master classes, and
Okay.
I'll keep on going through it. But there's a basic. If you just follow Maverick and the Maverick signal, it will tell you to exit. If you're in a losing position, it will eventually tell you to exit, and it may end up as a loser, or it may be that it recovered and then it told you to exit, and you came out with a small winner.
Good point.
But so if you just follow the Maverick signal and you say, I don't care, I'm just going to hold through this, then Maverick still, even with those weird dips and stuff, Maverick has on the S&P 500 has over 85.6% win rate, and it has a ginormous profit factor. It's 2.33,
Good
which is
Lord.
huge for the S&P 500. And so but if you don't want to hold through that period, and what we do is I give you a chart of average hold times. And if it starts to eat into that average hold time, it's starting to get a little too long, then you just exit.
Okay. Excellent. That's fantastic. So the point is that you've got a system that's really designed to take the emotion out of the trading. Once again, if you just basically work with Maverick and you trust it, it's going to give you the signals. And of course, at the end of the day, I think the trader has to decide, am I going to get into this trade, when to get out of it? But you basically said this is a structured system. You shared everything that goes into it, and you just basically follow what it tells you to do. I mean, I think that's amazing. Now, for those people that go with the Gamma Pockets, how many trade alerts per week might they expect in that program,
Yeah.
Kane?
So on average, it's 1 to 2. We're about to start picking up the volume again because we're now. So I, if one thing that you'll learn about me is that through my professional experience, I've managed tons of money. I was at a $1.7 trillion firm. I touched every single account at that firm, which is pretty unusual. It was over 7,000 accounts.
Wow.
So my mantra and what's been drilled into my mind is always safety first. It's like the financial Hippocratic oath. Okay, just do no harm. First, do no harm, and then start building money from there. So I am always looking at safety in mind. And if the market just isn't giving us good opportunities, sort of like what I told you guys earlier in that education portion, what's the worst time period for investor or for traders right now, buyers of options right now? It's actually right now that this is the worst time. And so to protect you, I do slow down the number of trades during that time period, but we are about to exit that time period. At least I anticipate that we're about to exit. So you're going to get that volume of trades back. So typically in normal environments, you'll probably get between 1 and 3 trades per week. And right now that's about to pick back up. So we'll get back to that normal volume, and to make up for this period, once that we get the all clear from the market, I'm going to be putting out more than normal in order to make up for the lost volume recently.
Fantastic. And that makes sense. And I know that, Graham, that's something that we do across the board. For those people that are providing trades and alert services, we're never going to give you a trade because we feel obligated to give you something during a week. If the market is not showing something that's gold plated from the perspective of what our gurus, are looking for, like Kane, as you said, safety first, you're not going to issue the trade. There's no upside to that. Nobody likes a losing trade. We know that there will be losers, but there's a way that we can filter those out. I think that's fantastic. Let's see here. So a couple other questions that came up. So Rob says, does it automatically scan for trades, or do you scan several stock lists? Can you talk a little bit about the scanners?
Yeah. So, well, here we have to work with the system, the platform that we're on. So on Thinkorswim, it constantly scans and new opportunities will populate into your list automatically. And when you see that, you can just take a look at it, see if you want to trade it. For Thinkorswim, it's a little bit, you have to hit the scan button in order for it to scan. Okay. So whenever you want to scan, you click that scan button, it scans and it shows you everything that is hitting at that moment in time. And did that answer the question? I think
I think it was. Yeah, there was, I guess, 2 parts to it. So you've got a scanner and it looks at bullish and bearish opportunities. Is that correct?
Correct. Yeah.
Okay.
And I'm not supposed to do this, but it's my show, so I can break all the rules I want.
Yes, you can.
I'm going to give you guys a little sneak peek here. One of the stocks that's on the scanner is a stock that I've really enjoyed trading lately. It's a communication stock where, if you guys have been paying attention on the show, communications has been one of the strongest sectors. I was going to hide the ticker, but if you saw it fast enough, you can see it. It's had quite a few entries over the last year, and I just counted them over the last year. It's 10 for 10 on this stock.
Good Lord.
Nice.
It's got a new entry today. You can see it right there. Now, for a freebie, just because I love you guys, ticker's AT&T, ticker's T, and look at this, guys. Yeah. Entry winner, entry winner, entry winner, entry winner, entry winner. I sound like a broken record. Entry winner, entry winner, entry winner, entry. This one took a little longer, but it still won. It looked like a loser, still won. Entry winner. We got a new entry today. That's one of the stocks that you'll see on the scanner today. And I haven't even pulled up the short scanner today as well. I'm sure there's even more opportunities there. So just look how easy this is, guys. You just follow the buy arrow, sell, buy, sell, buy,
and
sell.
Graham, to that point now, because there's another question that came up and says, okay, I see the arrows, the buy and the sell arrows. Now, Kane, will you help me understand how to convert that signal into an option trade that I can take? Is there a formula that you use when I see that alert as to what's the best option to take?
Yeah, so I go into it thoroughly in the masterclass as well, but I'm happy to give you the short version right here. But real quick, before we talk about that, what Graham showed you guys, what's really cool is that it's very easy to do a visual backtest. That's what Graham was doing, and just say, let me confirm these signals and say, hey, the last 10 out of 10 were great. Or maybe I've happened to find a ticker where it's like, oh, okay, well, it was a little bit choppy. Maybe I want to wait for one that looks more like that AT&T trade. But to answer, Raleigh, the question that you brought up was, well, how do I know what option? Well, part of the beauty and maybe the frustration for some people is that it's left up to you. You get to express the trade any way you want to. And you see that, that there's a high win rate right here. And I actually give you tables on every single stock. What's the Maverick win rate on this? What's the profit factor on it? What's the average hold time on it? And so you get to see, that would be one of your decision points, as you'll see in the masterclass, of like, hey, AT&T, whatever it is, 90 something percent win rate with a huge profit factor, I'm going to go in on it. And it will also tell you when it wins the average percent gain on the underlying stock. And based on that, you can say, well, hey, I'm feeling frisky today. I want to take bigger risk. I'm going to go for an out of the money option because I know that maybe AT&T, for example, maybe on average wins about 5% on these signals. Okay. So I'm going to be willing to take a out of the money option. And if we say, hey, well, I'd really rather be conservative today. There's a lot of volatility in the markets. I don't want to hold on for a really long time. I just want to be in and out for a couple of days because I understand that volatility means that I'm paying expensive options. And you took the class this morning and you know that if that volatility starts to drop, it's going to eat away at the price of your options. So I don't want to wait for that volatility to drop. I'm just going to be in this for 2 or 3 days. I'm going to go for it at the money or in the money. So I teach you all the considerations in the masterclass, but a simple answer is I like to go about 1 to 2 weeks expiration beyond what I expect to hold the trade for, and then I like to go anywhere from 40 to 70 delta.
Okay. Outstanding. And once again, I like the way you said is that really is at the discretion of the trader, but you are providing all the factors and then the trader can make a decision as to how they want to go ahead and trade options on these. Now, there was another question with regard to options is that if I look to trade options, can I use simple, level 1 options? Can I buy calls or puts because these are largely directional trades? Or does that also get back to the experience of the option trader?
Yeah, so if you want to just do simple calls and puts, that's completely appropriate. Maverick is a short-term system, or the way it's set up. I mean, you can tweak the settings of it, just like any indicator. You can tweak the settings of an indicator and adjust it for different time periods. But the way it's done is optimized for a roughly 4 to 10 or 12-day hold.
Okay.
And then, so if you want to express the trade as a simple call or put, you can absolutely do that.
Okay, outstanding. Let's see here. So there was a question from Rob, and I guess he was looking at the lifetime, and he's saying, can you explain what the Gamma Pockets option code is? Is that like a bonus associated with the lifetime?
Yeah, that's a bonus with lifetime where you get code in Thinkorswim that shows you the gamma levels at each option strike price.
Okay. Outstanding. So it's another benefit of going to lifetime. Well, it is a lifetime program, but in Gamma Pockets, if you go with lifetime, with that, right. You have that. This is really lifetime for $8.97. Graham, is it really lifetime?
It is really lifetime.
Roger did this launch originally with Kane, and he immediately messaged everyone who works here at this company and says, whose idea was it to do this price lifetime at $8.97? This was a terrible idea. It should be more like $2,500 at least. So we're going to get that fixed. We'll get that cleaned up. And guys, when you see this again, I bet you it's going to be a lot more. Again, we do have this new wave of memberships. They're less than 200 now, probably 150s range at this deal. The first round filled up like that. I'm sure this one will too. And the price just keeps going up from there. So don't miss out. Really exciting, Kane, what you've done here. And I love that you've just been able to bring it the price way down so that pretty much everyone can access this.
Absolutely. Today. Yeah, Kane, as long, I don't know you for a long time, but we've known each other for several months. And I know that from your perspective, you try to knock away any objections, that people might have, including price, because you really want people to have these tools in their hands so they can use them right away. And this is, and this is arguably something that people will use for the life as long as they're trading, this platform, has that kind of duration. And some folks were asking, so when you make changes or upgrades, am I going to have to pay a special price when you go
No.
ahead and do that?
So something that you may or may not know about me is that I'm always tweaking. I don't stop. I don't stop thinking about this stuff, and I always come up with something. I always want to change something, but very importantly, I don't just change it without testing it. So what will happen is you will get static. This is proven. I have the calculations, I have the data, everything is known and calculated in your favor. And that is what you get. And then I'll play around and tweak over here. And then I will test again and I will get that hard data. And when I have that hard data confirmed, then I come and I upgrade the system. So my mind doesn't stop. I think about this nonstop. And anytime it drives my wife crazy. She's like, can you just do this? And it's like, no. Like, it works so well already. Can you just stop working on it? It's like, oh, well, what else am I going to do?
Well, I mean, once again, you're such a consummate pro at what you do. And I can only imagine that, like many people that are really great at what you do, we're constantly in search of perfection. Is there anything more that we can possibly do? But more importantly, I know that initially you built these tools for yourself, to give
That's right.
yourself an edge in the markets. And so from that standpoint, as an active trader, I can see you probably have a little short list of things that grow saying, hey, here's some things I'd like to tweak to make it easier for me. And if it makes it easier for you, it's going to make it easier for everybody that's there. The point is this, folks, for those of you that asked the question, when you get lifetime for $897, you're automatically going to get any updates or changes or modification that Kane makes to the software. And it was just released this week after extensive development and testing, but there's going to be enhancements down the road, and you'll definitely go ahead and get those as part of this program. Let's see here. Some other questions. Sue was wondering, do I have to buy 100 shares of stock, correct? And I told her, no, these are not covered calls. But would you like to address that? I mean, I think that's what she was wondering.
Yeah. So you get a signal and it says, hey, buy. The Maverick says, here's a buy signal. And if you want to take that trade, and you want to buy shares, then you can buy 1 share or 100 shares or 1,000 shares or 5 shares or 3 shares. It doesn't matter. It's completely up to you. So there's no forcing you of buying any quantity at all. And then if you want to buy a call because you got the entry buy signal, then you can buy 1 contract or 2 contracts or 10 contracts. It doesn't really matter. 1 contract might control 100 shares, but you're not obligated to buy 100 shares ever.
Okay, excellent. And Graham, thinking about the what you mentioned at the end of the presentation, where Kane is offering, I guess it's a month's worth of code, or I guess what you're basically saying is, hey guys, if you have Maverick and you're going to automatically be invited to receive a month's worth of trades that you personally curate. And these are trades, I'm assuming, that come from Maverick, part of your Gamma Pocket program, and that's a trial. So that's incredible. And guys, once again, that's something that, if you've already signed up for the program or you're just signing up today and you're part of the 299 people that have access to this, and I think, Graham, you said we're under 150 now, and these are selling fast. You're also going to get 30 days access to, Kane's basic, proprietary service. It's a private telegram that you'll get with this information, and get a chance to just go ahead and take advantage of that, in addition to everything that you get with Maverick. Now, Kane, I know that earlier this week you did a masterclass. Do you have any other masterclasses coming up?
Yeah, we have this upcoming Tuesday. We have another masterclass. So you haven't missed out. We'll go over any material that you guys want to go over. And also the Telegram channel that Raleigh was talking about, that came directly from the previous masterclass. There wasn't a single person in the masterclass who didn't want me to provide an alert service. So we created an alert service. So I'm constantly taking feedback, listening to you guys, and giving you things that you want. So basically, I look at Maverick every single day also. And when I find things that I'm excited about in Maverick, I post it up onto that channel, and you can jump into that trade alert if you want to.
Okay, great. And I just want to be clear on something. This isn't 30 days access to Gamma Pocket Pro, is it? This is, or is it?
No, it is something completely new. It is
Okay,
alerts that are coming directly from Maverick.
perfect. Perfect. And I didn't want to misstate things, but thank you for that clarification. And that's unbelievable. So once again, this was feedback that you got in the master class, and you're going like, all right, we'll go ahead. I'll set this up. We'll see how it goes. And that may basically become ultimately a new service that you offer, but it's directly tied to Maverick.
Correct.
Yeah, wow, outstanding. Carl was wondering, how does the software work when the market's moving sideways?
Well, it's looking for those unique individual stocks that are not moving sideways along with the market. So if you have a sideways moving market and an individual stock is moving upwards, that is a strong signal that that has relative strength or is about to have relative strength. The market maker is anticipating that it's going to have relative strength. So that's actually a pretty powerful signal.
And remember, guys, just because the broad market is chopping sideways, that doesn't mean every single stock out there is. In fact, just the opposite. There's always stocks going higher and there's always stocks going lower. Even in 2022, where 90% of stocks were going lower, we saw all the energy stocks going sky high, doubling in price. So Maverick is always going to find those opportunities for you. And again, you don't have to sit there and punch in tickers all day long. It's got the scanner built in, so it'll just tee you up with those entries right away every single day.
Absolutely. And I know, Kane, there's a scanner here, but can I also just type in, individual stocks and does it do a quick analysis for me?
Yes, absolutely. So you can type in anything, any stock you want to. You can see, and you may be like, "Oh, it didn't hit my scanner today, but it did signal 2 days ago, and it looks like it's pretty good price. Like it didn't move that much yet. I may just want to take that trade also."
All right. Excellent. Well, folks, once again, let me go ahead. This is Kane Shieh, and we had Graham with us. And
I'm going to hop
terrific.
off for a 12 p.m., but Kane,
Yeah.
really, really appreciate you being on here today. I don't know if you saw the chat. There were just tons of people super grateful for what you trained them on this morning. And then a
Oh,
lot of
good.
people very
Yeah.
happy with Maverick already. So excited to see more of those stories rolling in. But thank you. Thank you, Kane and Raleigh. Thank you as well. And guys, stick around, ask questions. They'll be here to answer questions for you.
Yeah.
Yeah.
Thanks, Graham. And yeah, thank you.
Take care, buddy.
Yeah.
Yeah. So, folks, once again, we're going to have Kane here with us for just a few more moments. And, I'm going to stay a little bit longer and answer any questions that you have. But Kane is the guru. He's the expert. This is his baby. And so this is your opportunity to ask him specific questions. But he's a busy guy. He's got to jump into some stuff. But, please post in the chat panel any specific questions you have. As I said, I will stay a little bit later and answer any additional questions that you have and do just a quick little wrap up. But let's make sure that and Kane, it looks like things have quieted down here. I am prompting people. I'm probing. Challenge him.
Nice. That means people are clear. We have, as we said, tie it back to the beginning lesson. We have low uncertainty, which is beautiful.
Yeah, absolutely. And just the last question that popped up here, can we get a recording? And the answer is yes, guys. I just posted this in the chat. This is a live presentation and it is being recorded. And if any of you would like to have a link to a copy of this presentation, just do three things. Give me your name and your email address and say, send me the replay and put that in the chat panel. And when we're all done here, I'll get that to our customer care team and they will send you a link to that replay as soon as it's available. Kane, I'm going to grab the screen here and let's see here and basically go from here. But once again, thank you so much for your time today and for all your hard work in putting together this program. And for those of us that are looking for an edge in the market, I think we found a definition of what an edge is.
Thank you, Rolly. Thank you very much. Thank you, everyone, for joining me and sitting through the lesson. It was my pleasure. And I hope to see you guys in a masterclass where I'll teach you even more stuff. All right. So have a wonderful rest of your day. Thank you, Rolly. I'll see you all later.
All right, buddy. Take care. Look forward to seeing you later. So, folks, once again, that was Kane Shieh. sharing his new flagship approach to how he likes to identify trades in the markets. And for those of you that came late, my name is Raleigh White. I'm the senior moderator here at the Trading Pub and the Prosperity Pub. And I do have the great good fortune of being able to work on a regular basis with people like Kane Shieh and Graham Lindman as they bring us strategies, techniques, platforms, ideas, approaches for initially how they like to trade the markets. And now they're sharing those same things with us. And as I said, we're always looking at ways to give you an edge in the market. And I think that meets the definition of that. One of the things that I've done is I've created a quick little summary over what was presented today. I've stripped out all the marketing stuff and testimonials and things. And I'm just going to cover the program basics and then talk to you about our special offers. And then I'll answer any questions that you have. So please post those in the chat if you've got any questions, and I'll address them when I conclude my summary. So the focus today was on Maverick. And Kane started right out by saying, you know what, guys? Technical indicators are outdated. And that just kind of slapped me in the face because as a trader, I'm a technical trader and I have relied for years on things like stochastics, the Bollinger Bands, the MACD, things of that nature, RSI to determine when I should get in and out of trades. But once again, at this point in time, he says, guys, it's not helping you. It can't help you. And why? Because over the past few years, options trading volume is exploding. And this line is so light on the chart. It's a gold line, but you can see that it is just moving incredibly higher to the point that on a routine basis, there are more options traded on a stake than there are shares on any given day. And this is forcing Wall Street to be more proactive than ever before at adjusting options prices ahead of a big move, completely tipping off their hand and showing their cards to us. And this is what Kane was focused on. And he's so uniquely positioned to do that because of all the time that he spent with PIMCO, and he just knows so much about the markets. And he said, I'm going to focus on this because you'll see that market makers start to decrease the prices of options, which is what you see right here, a slow decrease in the price of options just before a stock starts to stall out. So they've got internal systems that's telling them what's going on, and they tip their hand by slowly reducing the price of options, meaning they expect that there's going to be a stall. But on the flip side, you'll see that market makers also start to increase options prices right before a big move going higher. Once again, they've got internal systems that are telling them what they expect to see happen, but we see the results of that as the options price start to slowly increase, indicating that there's a big move on the horizon. And that's exactly what Maverick is looking for. When a stock's options are cheap and the options prices are starting to rise, as we see right here, that's when Maverick strikes. Not when the move is obvious. Once again, when it's obvious, everybody sees that, and not when the options are already expensive. Okay. But right at that inflection point, when things are just starting to shift, where we can basically see that things are moving higher and the options are still cheap. And that allows us to get in for cheap right when the market move is showing that they're anticipating a big move. And this is the edge that we're looking for. And in this particular case, that was a 335% gain, not in the underlying price, but on the options. Had you bought a call here, boom, you'd be up 335%. So when you join the program, everything that you need to get going today can be found in the Maverick Getting Started guide. You'll find a step-by-step video to get you up to speed in no time. And that's the beautiful thing. There's no installation needed. All you have to do is copy and paste a simple link. And it takes about 10 seconds. Just watch this short little video, import, boom, it's done. Very, very simple. Now, after that, you're good to go. The newest entry signals will be auto-populated for you on the left-hand side of the screen. This is the scanner that we're talking about. It's on the left-hand side of the screen. And if you click on the ticker, in this case, Meta, you see that it automatically pops up on the main chart right here. And then it's just point and click and trade. That's all you need to do. And in this particular case, looking at Meta, we see that we would have gotten in here, gotten out here a couple of days later, 134% gain if you had traded that option. Now, currently, we have Maverick programmed to run our Thinkorswim or TradingView, whichever you prefer to use. And that way, pretty much anyone in the world can access these powerful signals starting today. So it works on Thinkorswim and TradingView. But that's not all. We're also going to train you on how to use it just like Kane does. It does us no good if we just give you a platform and say, good luck, guys, go for it. No, Kane wants to take the extra steps to let you know this is my tool, here it is, and here's how I use it. Okay. So, from that perspective, he's going to be hosting a series of live masterclass sessions where you can ask him any questions that you might have about Maverick. He'll walk you through Maverick one step at a time, show you how to easily pick up new trade signals with it nearly every single day. And he basically says there's about 2 to 5 signals that pop up on Maverick each and every day. Plus, he's going to show you how to select the options that he likes to use best if you want to leverage your returns. You can trade the underlying stock if you want to for those moves, but as we've shown you, a 5% in the underlying stock can mean an 80 to 130% gain in the option. You just choose which way you want to go with that. And of course, these sessions will be recorded. If you can't attend them live, because you'll all be invited when you join, you'll get an invitation to the live master classes, but they will be recorded and they'll be placed in your members area if you can't make it, so you can watch it at your leisure. Now, when it comes to pricing, our publisher established a retail price of $29.97, and that's per year. Okay, that's what he said, per year. But since we're just launching it this week, it was just literally introduced this past weekend to internal members. And then to the general public on Monday, we've decided to put together some terrific incentives. The first thing that we decided to do is to slash the price by $1,300. So instead of $29.95, okay, we dropped the price to $16.95. And then Kane said, look, I just don't want price to be an impediment, and I'm going to knock the price in half off again, which means that for new members who join the program right now, you'll only have to pay $897. And if that isn't good enough, folks, once again, if you join during this webinar, that's going to be for lifetime. So in other words, for $897, you can have Maverick for lifetime, not $897 per year, $897 per lifetime. Now, here are some frequently asked questions. Is this only for Thinkorswim? No, it's available for TradingView. That means if you're outside the United States, or you can still start using Maverick right away. And if you do prefer Thinkorswim, like a lot of folks do, it takes less than 10 seconds to copy and paste the link and get started. So it comes on both of those programs. Question number 2. If I'm a beginner, is Maverick good for me? And we think so. We really do, because it gives you a huge edge with a clear structured framework for entering and exiting your trades. And in Kane's opinion, as more and more volume shifts to the options market, this will be the only way to find highly accurate trades in the near future. So if you are a beginner, associating with yourself with Kane means that you're going to have an excellent mentor that's going to teach you what you need to know about the markets, how to respect the markets, and how to basically position yourself to take advantage of what's going on before you learn a ton of bad habits. And secondly, with a platform like Maverick that's automatically really selecting the best opportunities for you, it removes the most challenging aspect of trading, which is, what should I trade? Where should I get in? Where should I get out? And I don't care if you're a beginner or if you're experienced, that's a challenge for all of us. And Maverick kind of knocks that away. So if you're a beginner, what does that leave you with? You just have to teach yourself how to enter the trade, the physical mechanics of entering a trade into your broker's platform. That's what you focus on. And once you've got that down, because the signals are coming to you, open up a paper trading account, learn how to basically buy a call, buy a put. Maybe you're going to do some spreads because he teaches you to do that. Teach yourself and make sure you can do that in a simulated account as a beginner. And then when you got it down, start to trade with live money, single contract, and grow from there. Do I have to trade options? No. You're going to get the entry signal and you can trade the underlying stock if you would like. But the examples we showed with these big gains, 80, 100%, 135%, 350%, those gains came from trading options. But it's up to you. You can certainly trade the stock or trade the option. Can I trade this to the downside? Absolutely. Kane's team custom programmed the tool to work in both directions. So if you like trading put options to the downside, you could certainly do that as well. So this tool is universal. It's basically going to scan the markets for the best bullish opportunities and the best bearish opportunities, all built into the scanner. Let's see. What if I have questions about how to set up Maverick? Well, one thing you could do is contact our customer support team. It's a US-based support team. They're trained to help you. You've got that as an option. And if for some reason we can't get it working for you, or to your satisfaction, you've got 7 days to call our team. And if we can't get it going for you, we'll refund every penny of your investment. But we also have, and this is really something that we do that sets us apart from many companies, is that we have a team of people that's available from 10 o'clock to 1 p.m. Eastern every day, Monday through Friday, and they're there specifically to answer your questions. It's called Customer Service Live. And so that's 18 hours a week, 3 hours every day. Come as often as you want. You go to the members area, you just basically click on Customer Service Live, you go right into a live Zoom room, ask your questions, and the team there will make sure that they answer your questions and get you as comfortable as they can with the investment that you have made. Now, once again, tradingpub.com/MAV. When you click on that, this is what the landing page looks like. You'll see Maverick VIP. VIP means lifetime, folks. So $897 for lifetime. So let me go to the chat panel. That's the end of my summary, and see if I can answer some questions here. So I see that a number of people are asking for a link to the replay. Excellent. Let me go back up here. Send me the replay. Yeah, folks, if you please, several of you said send me the replay. Make sure that you post your email address, or we don't know where to send it. Replay. Okay, Brent says, Raleigh, when's the next masterclass? I think Kane said it's going to be Tuesday. It'll be next Tuesday. So there's one masterclass that's already recorded in your members area. The next live masterclass will be on Tuesday. I'm not sure what the time is, but you'll get an email invite for that. Send replay. Yeah, Debbie, next masterclass next Tuesday. Yeah, Brent, not sure what the time on that is, when he's going to be doing that, but it will be next Tuesday. So let's see here. I want to make sure I pronounce your name correctly. I'm just going to, well, there's a gentleman that basically says, what's the target price and the stop loss? Is it on stock price before we enter the trade? Yeah, he's going to cover that all in the masterclass. He'll get everything that you need, but obviously at this point in time, you're waiting for the charts to show you an entry signal. That's an entry opportunity in the market. And if it comes to trading the underlying stock, including potential stop loss settings and profit targets, as well as the options trade, he covers all of that in the masterclass. All right, more requests for the replay. Excellent. Well, folks, listen, thank you so much for coming today. We know that your time is valuable, and we certainly hope that you got benefit from this terrific presentation on this incredible tool. I mean, I'm serious. I'm excited. I've got it. I've loaded it, and I'm going to be rolling up my sleeves and leveraging it in my trading. I'm just delighted to have it. So once again, thank you so much for coming today. It's Thursday. I hope the rest of your Thursday goes great. I hope that your Friday is equally well and you have a fantastic weekend. And I do look forward to seeing you at a future event. So with that, folks, take care. Bye-bye.